It's no secret that investing in real estate in America is a no-brainer if you're interested in returns and solid financial growth. However, it's not easy and it's very confusing. There's a lot of people out there talking to you about different strategies and methods, and I'm going to break down 4 of the most basic ones to explain to you how people are making money in real estate. I'm Hold It with PM Jen. Over 22 years of property management experience, managing properties for other people, making them make money, and being held accountable to their returns. So I know what I'm talking about. Let's get started. The first strategy I want to talk about, most commonly known as flipping, but I call it value add. See, flipping is one part of value add, and that's where you buy a property, hopefully you buy it cheap, and you renovate it and you pretty quickly sell it to the end user. So often you're doing what's called wholesaling, or you're buying distressed. So maybe you're buying from people who are in financial distress, legal distress. These are sheriff sales, foreclosures. I mean, you could buy them on market and flip them, but typically you're buying at these depressed levels and you're doing that work. You're going in, you're making repairs, increasing the value of the property, and then selling it retail, selling it to an end user, somebody who's going to make it their home or whatnot. And listen, that's a great way to make money. I always say you can make money buying and selling things. You grow wealth when you buy and hold them. But if you don't have the money to start with, flipping's a great way to get going. Now listen, this is really popularized by television shows and the media because it is splashy, it is sexy, and it makes a great 24-minute episode. But in real life, I find a lot of people get in over their head really quickly. So the core things you need to do with flipping: buy smart, renovate quickly and well, and then sell quickly and well. And so newbies, you can do it, but it depends on how much room there is on your deal for failure. And I find a lot of people get into these deals, they've massaged the numbers, and there just isn't the kind of flexibility that they need. Now, the part about value add that I really do like, of course I love renovating properties, and that's an obvious no-brainer to increase the value of a property, but there's a lot of different ways you can go about adding value, right? Because on an investment property, the value is based in how much money it generates. So yeah, I could put a new kitchen in, I could put in a new heating system, but what if I simply got the rents to market? So if the rents are 25% below market and I simply get those rents where they need to be, either through rent increases or turnover to market rent, then I've increased the income on the property. Maybe I can reduce the expenses. So say, for instance, I can do an appeal on the property taxes. I did that once on a property, saved $4,500 a year. Well, I could have raised the rent $4,500 or reduce the taxes. I reduced the taxes, increasing my cash flow and the property value. So you see there, utilities, heating and cooling expenses. So maybe it has to do with putting in coin-op laundry and different amenities that increase your rent potential or your amenity income. Maybe you're making heating and cooling more efficient. I'm buying a property right now. It's 2 units, it needs windows, and it has a oil boiler that provides the heat to both units. Well, I'm going to replace that with 2 gas boilers. So now tenants will be responsible for their own heating and cooling, and I'm going to replace all the windows. So that's going to reset entirely the income and expense potential of this property. And it's my bet that, of course, it's going to be to my favor. So I'm buying the property in its current condition, doing these value add strategies, and ending up with an asset that produces at a different level of income and has a different base value. Okay, my favorite strategy. It's the buy and hold strategy. And if you haven't figured out yet, it's combinable with most of the other strategies I'm talking about. Of course, it's not combinable with flipping, but with value add, that's often a part of buy and hold. So I call out buy and hold because there are several things that come with holding these properties for the long term that you want to take advantage of. See, real estate is really an exceptional investment in America. Our tax codes, our laws our judicial system are all set up really well to run this as the business that a lot of us are doing. And it's a really attractive asset class across the world. But you have to realize there's so much more than just the cash flow it's producing. In fact, these properties are producing income for you in 5 different ways. And in order to fully realize the value of the asset, you need to think about all 5 ways it's paying you. So I already mentioned the first way it pays you in buy and hold, which is cash flow, right? So I receive an income from the property, I have some expenses, and Lord willing and the creek don't rise, the income is greater than the expenses, and I have some money left over at the end of each month and year. And that's the cash flow, and that's one way that the property is going to make money. However, there's several more. The second is leverage, right? This is an asset you can go get a loan to buy. So you can buy a $200,000 asset with only $50,000 in your pocket. So leverage means I'm making money not only on my money, my $50,000 I invested, but I'm hopefully making money on the bank's money. So I went out and got a loan for 6.5%. I've got an 11% cap on this property. I'm making that delta of 4.5% as my profit off of the bank's money. The third way real estate's paying you, tax savings. You get to use that depreciation against the income that you're earning to make sure that you're not paying taxes greater than you have to. There's ways you can really make this go crazy with the real estate professional status, using those passive losses against your active income. But even for those who don't qualify for that or use that, the tax savings having real estate in your portfolio is incredible. The fourth way the real estate's going to pay you is through appreciation. Just through the natural growth of the economy and valuation of assets, real estate on average appreciates 2.5% each year. And so we see there that on top of cash flow, on top of the tax savings, on top of the money we're making from the bank, on the bank's money, we're also getting this natural appreciation of the asset. And that can be really powerful depending on the market. And the last way buy and hold real estate's going to pay you is a hedge against inflation. This is really the only asset class I'm aware of that keeps pace with inflation quite like it does. See, during COVID, we had an exit event and, property values were high and it was the end of the low interest rate environment. And I saw investors, older investors selling off. Now, if you were in your 70s or 80s, that was a great exit point. But if you were like a lot of the folks I was talking to in their mid 50s, wow, what a mistake. They cashed out these assets right as we entered a period of higher inflation. So they have a problem. Where do they put that money, that liquid capital that they've now liquidated these properties? Where are they putting it? You can find CDs, you of course can put it in the market, but even just like high interest rate savings accounts are like 4.5% right now. One of the best things about buy and hold is that you never get rid of the asset. So maybe you need $100,000 one day. Well, if you have that in the equity of the property, you can pull it from the property without losing the property and all that it's giving you. And then you have your capital available to do the other thing you want to do, invest or whatnot in a new thing. So that is one of the best things. There's a ton of great things about buy and hold, but there's a couple of things that are hard to deal with. So it takes a long time. It takes a lot of patience. It's a slow burn. You get rich slowly over time, but in a very steady, reliable way. So that's good and bad. The other thing is, because you're not going to sell, you need to solve problems. And that's not something that the real estate industry is really geared toward. I think they're really geared toward selling problems and not solving them. And so I'd like to see more focus for the buy and hold investor on how do I manage a soft market where maybe I'm not getting the rents I used to? How do I handle when I have a non-compliant tenant and it's getting expensive to handle that? How do I handle it when I need to rewire the property and it's full of tenants? Those are problems that need to be solved, but when you solve them, keep the property in your ownership. You're not letting any of that value go. The third type of real estate investment I'll mention is speculation. So this is when you identify that a piece of property is going to dramatically increase in value soon. So this might be speculating that an institution is going to expand their campus and want to acquire more property, like a hospital or a school. It could mean you predict that an exit ramp is going to be put in somewhere and the government's going to buy land for that. maybe a new mall or a new something's going to come in and raise the economic value of the property and make it a more popular location to own. So speculation could be a short-term hold, but usually it's a longer-term hold. So you're holding that property, so you're usually doing speculation in conjunction with another application like renting the property or using it in some other way. You know, speculation's risky. It's something that some people really seem to have a handle on in their small communities, is knowing what's happening when and where and getting into these markets before they blow up. But I'd say for the average person, it's really pretty risky to get good information to make investments like that based solely on the appreciation value of the potential speculated change. The last real estate investment technique I'll cover in this video is the BRRRR method. B.R.R.R.R stands for buy, renovate, rent, refinance, repeat. So what you're doing there is a combination of buy and hold and value add. So you're buying the property, you're doing renovations, adding value, putting a tenant into it, putting an income to it so you can go back to the bank, refinance it at the new value, pull equity out, and go buy the next property and do the same thing. That's the repeat part, right? So I take an initial investment where I buy a property and renovate it, and then cash out on that and take that equity to the next one and grow it. And this is a strategy that works really, 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 really well when you're great at procuring property, great at renovating and executing on that, and interest rates stay stable, banking relationships stay good, banks don't get acquired, etc., etc., etc. It really requires you to have a discipline in executing on these renovations and doing it quickly, and then the banking and lending relationships and a stable lending environment in order for you to have the confidence that you're going to buy that asset and then 4 months later go back and refinance it at a new level. It's done all the time. I'll warn you, it's not for newbies. And what I see people doing is having really big visions of this, and they're bigger than their ability to execute. And the problem is when you're balancing all of these notes, because often in a BRRRR method, you'll use more of like a hard money loan or some sort of short-term financing on the original buy. That puts a lot of pressure on the investor, and it makes it difficult when life or other circumstances come up. So I'd warn you, if you're new to this and trying it, take it slow. Do not get more than one property going at a time. This is why when interest rates change and markets change and shift, we find people telling stories of bankruptcy and having lost it all because it was really all on paper and dependent on those things. I love evangelizing real estate investment for everyday people. And as you know, I particularly love buy and hold investment. And so I'm here teaching you all the ways that you're going to hold better and hold forever so you can get all the benefits out of this real estate that are absolutely possible. Follow me at Hold It with PM Jen and on all the social platforms for the educational content I produce.